The SEC just went after Citadel Securities, and Citadel agreed to pay a $7 million fine. Now, I dug through this SEC article, and there are a few things that I pulled out that I want to bring to your attention. Citadel violated short sale rules and may have affected your orders. It also may have been faking their profits. And is this fine big enough? These are all things we are going to go over, as well as covering AMC, so don't worry about that. Make sure to watch until the end of the video so you don't have to watch another update video here on YouTube. Also, guys, hit the like button, hit that subscribe button, have post notifications on. Let's get into it. So they agreed to pay $7 million to settle charges for incorrectly handling millions of orders and violating short selling rules. Citadel Securities over a 5-year period had incorrectly marked millions of orders, denoting short sales as long sales and vice versa. It said that these incorrect markings resulted from a coding error in the firm's automated trading system. The SEC said that the firm also provided incorrect data to regulators during that time. Now, what does Citadel always do? Without admitting or denying the charges, Citadel agreed to pay the penalty as well as certify in writing that the coding error has been addressed and to review its programming and coding logic. So Citadel Securities has done this time and time again. They get caught, they pay a little bit of a fine, it's a slap on the wrist compared to their profits, and they don't admit or deny, they just agree to pay the settlement. This is exactly how they get off the hook. Now, there are a few things that I wanted to point out, and of course I'm not going to read all of this to you. Instead, I put it together in a nice tweet. So a few things I pulled from the Citadel suit. Citadel basically misrepresented a price and was able to sell for a profit hours later, and we're going to get into why. Now, this was all in the official SEC link that I will leave pinned in the top of comments under this video. In quotes, sell orders may only be marked as long when the seller has a net long position in the particular security, and as a result, an estimated millions of sell orders were mismarked. To fill client orders on a riskless principal basis, Citadel Securities entered into 2 back-to-back trades, routing a principal order to the market and entering into an offsetting trade with the client at the same price and size. Citadel Securities filled certain not held client orders on a riskless principal basis by placing multiple smaller orders, aka child orders. As each street side leg of a child order was executed on the market, the firm executed with the client a corresponding and offsetting current side leg. What does this all mean? We're going to get into it right now. This delay in updating the firm's position created temporary inaccuracies in the firm's calculation of its net position in affected securities for purposes of order marking. This in turn resulted in inaccuracy in the marking of certain orders for the sale of securities in the same symbol as the affected security that the firm placed in the market during the period before the firm's position was properly updated. During the relevant period, the delay in the updating firm's position in certain symbols lasted for a few minutes and in some cases up to several hours. So what does this mean? This means that Citadel, right, was placing orders and the numbers were inaccurate for sometimes minutes or sometimes hours. Okay, in other words, I place 2 orders back to back at the same exact price, and since nothing is accurately updated and the stock price is moving, right, you can see right here the delay in the updating firm's position created temporary inaccuracies in the firm's calculation of its net position in affected securities for purposes of order marking. This in turn resulted in an inaccuracy, yada yada yada. In that time period, while the stock is moving and I have those 2 orders placed at the same exact price, since this quote unquote coding error exists, we basically can't lose. I can't lose a trade. And the reason for that is because even if I do it several minutes later, I'm already sold and out of the trade for either a profit or closing that short position for a profit as well. So Citadel Securities was basically guaranteed making money for 5 years, and they were just fined $7 million. Now keep in mind, that is only 0.04375% of 2022 profits, and this has been going on for 5 years in total. So if you made $60K a year by robbing banks and got fined 26 bucks, would you do it again? Of course you would do it again. So no, I don't think this is going to change anything. Is it a step forward? Probably not. But it seems as if the SEC is throwing retail a bone and trying to show us that they are going after Citadel. Now, not 1, but 14 instances, Citadel was fined by the SEC for either failing customers with accurate data, failing to show the public accurate data, pricing and execution, spoofing, stock manipulation, failing to report to FINRA, whatever it may be. They were all very, very similar, and they were all fined since 2007. I believe there were some fines before that as well, but every single time they didn't admit or deny, they just paid the fee and still yet to get jail time. Now, InvestorTurf posted that retail investors should rally behind Gary Gensler because he has been going after the names, and that is why you see Citadel and Doug Sifu pushing for his removal. They basically say that Virtu engages in high-frequency trading trading practices, and that can disadvantage retail investors, and the new regulators would curtail these practices. Given these factors, stand behind Gary Gensler. Now, what do you guys think about this in the comments down below? Dave Lauer used to talk about this as well, and it was interesting that Citadel wrote letters against the proposals Gary Gensler brought, and then Hester Pierce was going against Gary Gensler, and more were trying to get him fired. So it seems as if maybe we possibly should back Gary Gensler. Now, speaking of Dave Lauer, he posted, "I spent the week in DC meeting with members of Congress, their staffs, and plenty of people over at the SEC, and we talked about equity market structure, abusive short selling, GameStop, and yes, even MMTLP. DC is paying attention right now to individual investors. Not only is there still that short investigation, not only did Citadel just get fined, but Dave Lauer is basically saying DC is also paying attention to individual investors and looking into abusive short selling. So the more eyes we get on it, the better." Now, AMC today trading at $7.89, up 2.47% on the day, slightly scaling up. Not much to pay attention to here until we see that volume kick in, until we see it stop barcoding. I don't see another big move to the upside ahead. Also, I want to see a break over $15.30. GameStop trading at $17.04, up 0.12% on the day, basically trading sideways, and this is what I'm expecting for GameStop in the medium term. Come back up, at least where it's at right now. It's kind of around that zone, around $17.45. It doesn't have to be exact. Come back down, test $15.60, retest this trend line, $16.43, before trailing back down to $13.35. This is the sell-off I see for GameStop. It could definitely not happen, so just take it with a grain of salt. AMC Fidelity orders again, 81% to 19% buy to sell ratio. A lot more buy orders than sell orders, and you can even see that by the order imbalances. We had another one today of 115,605 shares, but actually on the sell side. So it seems as if they are just routing shares back and forth, back and forth. They're not going to match the sell imbalances with buy orders because they are getting rid of those buy orders to keep the price stagnant. Also, AMC spoofers Barclays are hedging their shorts with a little bit of a long position, about $1.83 million worth of AMC. They added over 14,000 shares filed today. Before we get into the S&P 500, guys, pop in the Discord. I'm in there on the daily with 500 of the most amazing people who talk stocks all day long. We also post gains, post losses, and have options trading alerts in there, so get in the Discord. Also, if you want the 16 free stocks, download Moomoo using my link. It's in the top of the description and pinned in the top of comments. Once you sign up and make it a positive even $1, you are going to start earning benefits from there, like a free Tesla or Google stock, up to 16 free stocks on top of that, each valued up to a couple grand per stock, and $50 sent to your account. Now, the SPY is trading at $432.99, up 0.37% on the day. It got this sell-off. There is a gap fill to the upside again at $438.53, right around that zone. Will we fill it? Who knows? If we do fill it, I do see a rejection after that. Now, this is a level that we were watching for the SPY, and we had it drawn out right around $431.40. If we break below, we're coming down to $422.60 on the SPY. That is the next level I'm watching. We have $438.68 if we're bullish, and then $422.60 if we're bearish. Now, this is scary, as AI could potentially crash the entire market. The top 5 stocks now reflect 24% of the entire S&P 500 market cap. This is the same exact level seen in 2020 prior to the pandemic-related crash. And in 2008, the top 5 companies only reflected 14% of the market cap. And in 2000, which was one of the largest bubbles of all time, it only represented 19% of the S&P 500's market cap. Now, markets are being held up by a few big names, and all of these names are AI-based, which is a scary thing to see, because if something happens to the AI sector, something bad could happen to the market, seeing that 24% of the entire market cap of the S&P 500 is now AI. So is the SPY still safe for a long-term investment? Now, the Binance CEO to file to dismiss the SEC lawsuit. And finally, to close out the video, 10-year bond yields are at the highest level since 2008. Overall, guys, that is what I got for you for today's video. Make sure to hit the like button on your way out, subscribe to the channel, have post notifications on. I love you all. Lottery Stocks out.